All right, ladies and gentlemen, it is May 1st, 2023. And why do I have the money and passport? Because the United States government is running out of money. Now, don't get too worried. They still got about $250 billion. But given what happened today, everybody's worried about FRC and the banks. They weren't that worried. Things were actually good, surprisingly. But with everything going on right now, this debt limit, the debt ceiling, the downgrade, the default, this thing is about to get real, or at least after we get Powell, this is about to be very important. So I got a little bit of a breakdown. We're going to talk about that, but then I want to talk about FRC and what happened with JP Morgan, and then we're briefly going to go over Powell, but then tomorrow I am going to have a full Powell rundown, and if you are not aware, youtube.com/the stock market, baby, I'm telling you, on Jerome Powell days, you're going to want to be there. And if you're not aware of the macroeconomic calendar in the next coming weeks, it's about to be packed. So I hope we see you there. And just don't forget that debt ceiling. I'm using America, baby, but we have a lot to talk about. I think you need to drop your thumbs up. I'm not going to do the intro. So let's just get into it. Let's talk about it. Number one, though, before we get into debt ceiling, let's talk about FRC. And why do I have a Miami? I don't know why I have all this Miami stuff. Honestly, just shout out Jimmy Butler in the Heat, and hopefully the Lakers win by default because I'm from Southern California. But anyways, FRC today, they did go under, and now First Republic is literally the second largest bank failure to ever occur in United States history. At first, it was SVB a month ago, but now if you look at the level of assets, FRC was bigger, pushing SVB to down to number 3, and now 3 of the last 4 largest bank failures ever in history have occurred in the last 2 months. So why is this such a big deal, and why am I starting with this? Because I think a lot of people need to understand what's happening. Number one, FRC is done. The stock will trade eventually at some point in the future, but there is zero value proposition left. And now on top of it, a lot of people are arguing whether or not they failed. It sounds like JP Morgan just bought them out, but that's not really what happened. It's not as if JP Morgan made an offer and said, we'll pay you $15 a share, we'll pay you $100. No, that didn't happen. All JP Morgan did was buy their assets from the government. They went under receivership. FDIC receivership is pretty much, you see, like, this is my money. That would be like the Fed saying, okay, you can't control it. And then they take control of all of your accounts, and then they just take all the money. That's pretty much what happened. And then they auctioned anything else off. So that's what I've been trying to tell people all day. You got to keep this in mind. FRC failed. JP Morgan is buying their assets, but for the most part, FRC is gone and it is over. I mean, what I'll tell you, best case scenario for FRC, if you're still holding the shares, best case in 2 weeks from now, it gets unhalted and it keeps trading under the same ticker. However, the shares will probably be at like 5 cents. Why do I say that? Because that's what happened with SVB. That's also what happened with Signature Bank. The difference between Signature and SVB went bankrupt. That's why they have a Q at the end of their ticker now, while SVB technically didn't go bankrupt, but it's still trading. They both lost 99% of their value. So best case, it trades in 2 weeks. It's down 99%. There's no bankruptcy. Worst case, it doesn't open up at all, or maybe it opens up in 2 weeks, but this time with a Q at the end of it, and it's still down 99%. The point is, don't fall for the Wall Street bet stuff. Don't let people pump it on you. FRC is over. Again, I made my play. I lost $1,100 on those 100 shares. We got out right before the news, but it's done. This idea to speculate on the risk to reward, it's now over, ladies and gentlemen. If in no way, shape, or form, if you have FRC, will you get your full value back. Can the stock move? Did SVB, did that move 50 to 100% after it went bankrupt? Of course it did. I mean, we've seen that a lot this year, but the point I'm trying to tell you, there is no longer any shareholder value in FRC. Why? Because JP Morgan owns it all. Remember, we were going over FRC's book value, and we were talking about the assets that they own, and that's why it was a problem if they sold them. Well, guess what? They sold them all off. Anything that would have given you any value as a shareholder of FRC, JP Morgan now owns it, and all of the junk is left there. And then again, the government still controls everything that goes in and out. Who buys from them, who sells from them, all of that good stuff, as long as we protect the clients who are all from San Francisco and have a ton of money. But that's all I wanted to explain, and even then to give you the full picture, and this is why now we got to start talking a little bit about the debt in America and all that, because the market took this news pretty well today. Surprisingly, the bonds sold off. There was a lot of other factors with bonds today. Number one, there was a surprising amount of corporate debt. There's a holiday both around the world, like we're saying, even Asia, but there was supposed to be limited bond volume, but now all of these companies that reported, they're hitting the investment grade bond market and they are dumping supply. That's why bonds went down. The yen, they got clobbered as well. And then sadly, I say sadly because it doesn't really make too much sense, but a lot of people are getting hope now that FRC went over, because now they're like, okay, hopefully this is the end of everything that we've dealt with. Now, I don't necessarily agree with it. Shout out to Danny, baby. Gotta love the Chads out there. You guys dropped some A1 comments throughout the day, man. And Danny said, he was like, I don't think the banking crisis stops with the second largest failure. I mean, so that's kind of where we're at with all of it, but very interesting reaction. And now we have to wait till Powell. Then we got to wait till earnings. And like I was saying, you better be locked into the stream or at least the watch list over the next coming weeks, because we have a bunch of other economic data this week. You had bad data this morning, but then after non-farms or after Powell and the non-farms on Friday and Apple earnings, the next week is CPI. And then we start getting everything else, PCE, producer prices, and before you know it, as we're getting through May, it's going to be packed with a lot of data. Then before you know it, it goes to June, and then we have a whole nother Powell meeting. So that's as far as everything, but now let's talk about the main event. I hope all of the updates were worth it so far so that we could actually talk about this, and I hope you're getting the full context, because I am not bringing up to you the debt ceiling in and of itself, because we've talked about it in the past. Wall Street has freaked out about the debt ceiling many, many times. It's okay to freak out, but never too much, because nothing ever happens. The only time, the one time in the last decade, maybe 2 decades, where the market reacted off of the debt ceiling, it was 2011. That was literally the worst case scenario. The United States of America got a downgrade in credit. They did not default, but the S&P credit agency, they downgraded their debt. Only one time has any of this ever been bad. That's why people say, okay, you can worry about it, but usually it's in everybody's best interest to resolve it. But now, why am I bringing this up? You had another bank failure. We're getting all these regulations. You have Powell at a very tricky, important spot. And now we're getting earnings, even though 80%, that's 8 and 0, 80% of the companies beat, the average positive move has been 0.5%. That's insane. There's all of these things happening, and it's just like, it felt like it was moving so slow. I have yet to talk about the debt ceiling in depth with you guys, and that's why it's getting weird, because we're dealing with all this stuff, and now it's about a month away. And that's where it gets weird now. So this update I gave you, this is the chart. It's showing the Treasury balances. But now why this is so important, because they gave a new update on their X date. They're saying this is when we can no longer do strategic measures and we've run out of money. There's no more available money. They said today, the Treasury and Janet Yellen, they said June, either the beginning of June or the end of June. That is now when the government expects to run out of money. So hopefully you understand. I'm waiting for this update. I'm waiting for all of it, but now we have it. And legitimately, I'm giving you this video now about 30 days until that event gets there. So now every week from here, every bond market move from here, it is going to be key, and we are really going to have to watch out for it. What do I think so far? I don't think react. However, I will tell you this. If there's no solution in the next 2 weeks, we start seeing political rhetoric go up. If you start to watch the bonds now, if it gets to the point where the bonds after Powell, this is why I'm bringing it all up. If we know after Powell, bond yields should be higher or lower, and the closer we get to the X date, you start watching parts of the bond curve kind of break a little bit or not react to what's going on, that will let us know that there is really a problem. But the whole point in what I'm trying to tell you right now is that the fireworks may start happening in June. So naturally, the next question should be, What do we do, Josh? Do we sell Bill? Do we buy TLT? How does that play out? I'm not making that video right now. We're going to make that later. What I want you to be aware of is the fireworks so we could confirm it or not. Watch for the early signals with the bonds. Watch the rhetoric. Watch what the Treasury says. And now even watch the Fed and any of the banking to see where we go from there. But pretty much if it's 2 weeks from now, the situation doesn't get better, maybe 3 weeks, you should be subscribed to this channel, because then we're going to come out with the video on what we should be buying and playing, because then we know it's real. It will be a mix of both bond plays as well as even shorting the bonds, but overall, it's going to be a downside reaction. I mean, somebody was asking there, they're like, what happens if this happens, and what if the bond? It's like, you don't have to worry about it, because like I told you, 1 out of the last 10 times in the last decade that it actually happened, the market dropped 20% in a week. So it doesn't matter what happens. Pretty much if the worst case scenario happens, you should know the direction where we're going. So gonna give you a follow-up update, but the point was we had a big update today. It came in line with all of this stuff with the banks. You're having the bond market already tweak out, and now we have a bunch of consumer earnings this week alongside Powell, then Apple, and then a whole entire crazy economic calendar moving forward. So that's everything as far as anything else, any plays. I told you guys, watch for the Uber or the Airbnb run up. Uber got a little bit in the morning. I think even MGM did good after hours. I made an option play. I grabbed the 230s for May. They went up like 30%, then they came down, but pretty much going to flip that ahead of earnings. I don't know if I want to hold Airbnb because they have pretty good comps based on how they did last earnings, but here's the best part. Uber tomorrow morning, they have really good comps, so if they beat and the market rewards them, it could give us a signal about Airbnb, but other than that, that's the only play. I got washed on the bonds. Oh my gosh. I bought the 2-year and 10-year thinking the banking stuff, and then all this stuff happened. So I did one average down on the 10-year and then just going to ride that out. I'm down like 2,000 between both plays right now. They're pretty big. That's why. And that's what I was trying to tell people. I was like, listen, FRC, I'm only doing 100 shares. The risk to reward, it's like straight up. By the time I lost less money on FRC going from $14 to literal Fed receivership, I lost less money on that than one day playing the bonds in this environment. Shout out to the MOVE index. I mean, it's already, the volatility has been crazy, but pretty much riding these bond plays, going to close all of them out before Powell very indiscriminately. Then after Powell, I'm going to hit the bonds in whichever way they confirm, and then we ride it out from there and see what earnings gives us. But Chattadonia, that is everything. That is your watch list. Drink that water. Stay hydrated, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, when you give it up, you'll get it. That's it. If you go for originality, you want to be the most original person, you're never going to be original. If you're so worried about the impression you leave with people, you're always going to leave bad impressions with people. You must be willing to give it up and free yourself, and you will gain it all. Oh, wow. You see that? I gained it all. Look at where did it all go. That was nice. That was nice, huh? It was awkward. I liked it. That was a good. All right. I hope you, I made it awkward. I just hope you saw what I saw, because all right, Horn.